It is time to check in with Amanda Lang. Of course, you know Amanda Lang, CTV Chief Financial Correspondent. What's your official title now, Amanda?
I am Chief Financial Correspondent.
That's not big enough. You need a bigger one than that, I think. Let me see what I can do.
I'll work on it.
Okay. Listen, there are a lot of things in the news today. We had unemployment numbers come out, and these were going to be, a lot of people thought, pivotal in terms of what the Bank of Canada decides to do next. The numbers were not good. There's not really any way to slice it other than that by saying, what do we lose? 66,000 jobs. You have the unemployment number itself over 7%. I think someone said worst numbers we've seen, excluding the pandemic, since 2016. So give me your take on this, just with those numbers specifically.
Yeah, we're for sure seeing the kind of export-led pain showing up now in jobs. So it was a surprising number. It was expected to be weak. It was even weaker than expected. So, and that 7.1% headline, I've seen economists this morning saying it clinches a rate cut from the bank. Although there is some disagreement on just how far or how fast they will go, and there are still some other moving parts, right? Because there's some inflationary pressures in the world that we should talk about, including some of the stuff that Mark Carney announced today. But overall, it paints a picture of, we're not getting away unscathed. Our export pain is showing up in the labor market.
When we last spoke, I think, and we had numbers to talk about then, it was manufacturing that showed obviously it was being hit. My understanding is in these numbers now with the service sector, we're seeing that being hit too. So this is pretty much across the board.
Yeah, we are starting to see, which there's a ripple effect, right? You lose a manufacturing job, and of course, it's going to affect somebody in service. We know the kind of externality effect of one job and all the others it might support. So you're starting to see that. The question, of course, is this sort of the worst of it? Are we settling in here? One of the things that's been on my mind is the business confidence data, which we saw, which is so weak. Businesses aren't investing. That's been a problem before. It's an increasing problem now. And I think, Aaron, a lot of people were, myself included, to be honest, were hoping that by now we'd have some clarity, that we'd have some kind of interim deal at least about what was going to happen. We don't. And the Prime Minister is kind of signaling that they're working on it, and there might be some details to share, but not that we're going to get a major trade agreement anytime soon. And I think that's probably going to add to this kind of erosion of confidence.
I heard someone suggest today, Amanda, that he was kind of underselling, right, Mark Carney, by saying, maybe small gains here, small gains there, that at the end of it all, there would be a big announcement. Do you buy into that?
I don't think so. I mean, I think, he's a very intelligent person. I don't think he's trying to pull one over on us. I think he's actually trying to be clear about what's happening, which is they're busy negotiating away the really painful tariffs that have no business being in place. We have steel, aluminum, we have lumber. There's just zero reason for those tariffs. It's crushing Canadian businesses and hurting American ones too, by the way. And we need to have those removed. So the fact that they're focused on those makes perfect sense. And the fact that it's a bigger picture discussion, right? We know that our trade agreement has to be reopened in its entirety in 2026. That's thanks to the renegotiated deal we made with Donald Trump back in his first term. And so that we are probably working on a broader deal makes sense. And that's a hard, long, complicated thing to do. So to me, it does make sense. It's taking this. I just thought we might get some kind of interim deal like the UK where they came out and said, look, we're going to drop to 7% across the board while we work on everything else. Maybe the good news is we'll stay at zero on most of our trade, which would be amazing.
So the other issue, since you brought up the U.S., we had numbers come out there today. From what I've seen, they're referring to them. I mean, they added, I think, 30-some-odd thousand jobs, well below the number they expected. So they're feeling the pinch here, too, as we thought they might, given the tariffs as well.
Just the latest data point from the U.S. economy that it's at what you might call stall speed. It is not growing, and the jobs data there really does confirm it. It's going to add fuel to the fire that the argument that the Federal Reserve, their central bank, should also cut rates ASAP. We know that the president thinks so. Interestingly, to see the stock market reaction to these things, right? Because when you get terrible economic news, it suggests there might be a rate cut, and then that sends stocks higher, which doesn't, in some ways, it doesn't make a lot of sense for stocks to go up on really bad economic data, but we do get this kind of weird situation where that can happen. So
let's focus on what happened. Coincidentally, on the same day that these terrible job numbers come out for Canada, Mark Carney holds a press conference and announces, I don't know any other way to describe it other than a wide, broad set of new, call them what you will, economic policies going forward, everything from EVs to manufacturing. So what did you make of what you heard?
This is, I think, really a budget preview because you're looking at billions and billions of dollars of spending. I was just doing the back of the envelope on this, and it's more than $7 billion on labor alone to support workers in different ways, including $1.6 billion to extend EI benefits for long tenured workers through next spring. That will be very welcome, of course, for people in the auto sector and in steel, et cetera. But these are big, big ticket items. And there's also, this is interesting because they've created these pools of capital to help businesses that are directly affected by tariffs, which makes sense. One of them is the Regional Tariff Response Initiative. That includes $1 million, what they call a non-repayable contribution, which I guess is a grant. We're giving $1 million grants to companies. And I don't know how you qualify. I don't know what the details are, but this is pretty sizable support for businesses that can get it. So it's a big spend. Hopefully it pays off because, of course, you got to, on the other side of the ledger, you got to find a way to pay for all this stuff.
I heard a couple of people reacting to this already saying, it looks great. It is, as I said, fairly broad. Is this doable, do you think?
It's doable in the sense that, we are a stable economy and we can borrow money. This is not a balanced budget by any means. There's no way we're headed for that. I was saying earlier to somebody else that I think one of the most interesting things about this budget is we might get our first look at the new form of accounting that this government will do, which is to separate what they call kind of capital investments from operating expenditures. And there's some logic to that. It does allow you to think differently about long-term investments versus which you can finance with debt perfectly reasonably versus your operating expenses. A lot of this, though, falls into operating, I would think. I don't think you could consider any of this kind of long-term expense. So I don't quite know how it's going to work out. This doesn't feel austere to me if that's what the Prime Minister was trying to signal.
Yeah, about that word, by the way. So yesterday, at least in Quebec, ears perked up when he answered a question in French and actually used the word austerity because, of course, in Quebec, we know that that's the word that basically brought down a Liberal government here 7 or 8 years ago. He's not repeated it since, has he? And what did you take that to mean?
I wondered whether it's an interesting word for the Prime Minister to use. It's usually the kind of word that we would use to describe a budget. It's not one, of course. I did wonder actually whether it was just a translation issue and whether he meant something slightly. You could downgrade from there. I don't know what a better synonym for that would be, but restrained or, prudent maybe. I'm not sure. Because I would say just based on what we know already in terms of our commitments to increase spending on defense, for instance, it ain't austere. I mean, there are going to be big ticket items here, and that means we're likely, at least on the old math, not going to see a so-called balanced budget. So if it's not balanced, I don't know how it's austere. Now, is he signaling public sector austerity? Maybe, and that's fair enough. They are asking for pretty big cuts, even if it's only through attrition. You're going to see public sector layoffs, and we'll all feel that. That'll have economic implications. So maybe he's focused on that. I'm not sure.
Last question. One of the things I heard that he talked about today was this idea of Canada changing the way we obviously do business with other countries, where we want to see, 50% of our trade with other countries. Is that even achievable, do you think, given that, 75% right now is with the U.S.?
It's a big goal. It's a lofty goal. If we want to keep growing our trade from here and make 50% with other countries, it's achievable, of course. I hope we can do it. It's not easy, and it won't happen in the same way and as profitable as it does with the U.S. The reason we trade with the U.S. is because they're right there. It's the same kind of legal markets. It's the same language. There's all kinds of things that make it make sense for us. We can trade with the rest of the world, and we absolutely should, but it'll be harder and more expensive. There's no two ways around it. It's an interesting goal. I mean, I have to actually look at the numbers of where we think we can do that. The low-hanging fruit is on things like commodities, of course, which we're leaning into.
We'll leave it at that. Amanda, always appreciate it. Thank you so much.
Great to talk.